Welcome to Currency Cast. What is the outlook in terms of the payments space? Welcome to Currency Cast. My name is Agustin Mackinlay. I'm the senior financial writer at Cantox and your host. In this episode, we have the pleasure to welcome Lorraine Mouat, head of payments at Thistle Initiatives.
Hi, everyone. It's a pleasure to be here.
Great. Lorraine, can you start by introducing yourself to our audience?
Yes, thank you, Agustin. My name is Lorraine Mouat, as you've just so very kindly said, and I'm head of payments here at Thistle Initiatives. And I look after our clients who sit within the authorised payment institution or electronic money institution sector. We're supporting clients through the authorisations process, but also in terms of providing regulatory compliance audits, assistance with variations of permissions, change of control, and just general ad hoc advice and guidance, and of course, horizon scanning. So keeping our clients up to date with everything that's going on out there that might be relevant to their sector.
Right. Okay, let's start with our discussion with a very general topic. In its 2023 letter, Stripe said that payment methods are proliferating around the world. In 2023 alone, it added 50 new payment methods, support to 50 new payment methods, bringing the total to over 100. So, go ahead. What's going on here? Tell us a little bit more. Why is there so much interest in terms of the payment space?
Yeah, very good and very interesting question. I think, look, there's been a bit of a rapid proliferation of new payment methods globally, really. And I think that's a reflection of a few key trends and developments in financial technology, particularly. So in 2023 itself, there were, as you said, 50 new payment methods, bringing that total to 100. So I think that that's been predominantly driven by a combination of some technical advancements. There's been changes to consumer preferences and increased regulatory attention as well, I think, in terms of the need for financial inclusion and security. So with that, we've seen a rise of digital wallets. Of course, we've got things like cryptocurrencies, lots of contactless payments, and that's really been brought about by advancements in sort of mobile technology, and all of that's just enabled, I suppose, more efficient, secure, and convenient payment solutions that therefore are able to cater for more diverse needs of consumers, but also for businesses. But also, I think we've witnessed a change in consumer behaviour in recent years, which I think is very important to note. And I think it's fair to say that today's consumers demand a little bit more convenience, more speed, and more flexibility in terms of how they are going to make and receive payments. So I think there's a number of things at play here, but I think most importantly, businesses themselves are increasingly recognising the competitive advantage that they're going to get from offering multiple payment options. And I suppose if you're supporting a wide range of payment methods, then you're going to be able to cater to a much broader customer base, maybe reduce the cart abandonment rates, I guess, and just overall enhance that customer satisfaction and loyalty.
That's right. So it's a convergence of, say, technology and the fact that technology itself puts consumers at center stage, right?
Absolutely.
There's let's discuss a little bit instant payments, or sometimes called real-time payments. They've been under the spotlight for some time now, perhaps especially after the introduction of FedNow, the initiative from the Federal Reserve Bank of the United States. Now the systems allow, of course, people to move money instantly, and CFOs, which is also something, so people very important to us, they see instant payments as a potential method to improve liquidity management, working capital management. So again, describe to us what's going on in the instant payment space. Firstly, in the UK, and I understand the UK has been sort of a pioneer in this space. Is that right?
Yeah, I think instant payments overall are gaining traction globally, and I think there are various countries that are adopting and developing their own systems in that regard. But I think for me, the UK is most definitely a global leader, particularly in the fintech and payments landscape. And we're particularly known in the UK for our advanced instant payments infrastructure, including things like faster payments, open banking. But also, if we look towards Europe with SEPA, with increasing participation in that as well. And I think in the US, they've got, of course, real-time payments network providing instant payment capabilities for financial institutions there as well. And I believe Fred now launched in July 2023, giving the customers that real-time payment capability outside of those normal banking hours. And we are now starting to see similar things, I believe, in the likes of India, Australia, and of course we know Australia's got the new payments platform, something I think the UK is looking to try and emulate, and other regions that are up and coming, such as Brazil, Singapore, Hong Kong, all of whom have developed their own instant payment systems.
Right. Okay. Really interesting. Now, what is hindering, or what is, say, preventing instant payments to become even more popular in the corporate world? Is it maybe lack of access? Is it cost-related issues with legacy systems? What's your view?
Yeah, an interesting one. I think the development of instant payments in the business-to-business world is facing a few challenges, and I think I would broadly categorize these into access issues, cost-related concerns, and other type of operational and regulatory factors. So, for example, if we look at access issues, sometimes there may be issues associated with the need for both senders and receivers needing a deposit account connected to that instant payment system, or maybe a need to upgrade back-end systems to integrate payment capabilities, which might in themselves be quite costly. Or it could be the cost of the associated transaction fees themselves. But I think firms may also have some liquidity issues, as those sort of instant payments, as we know, require that immediate availability of funds. But of course, it could perhaps even be something as simple as reconciliation challenges. So I think there are a number of challenges, just depending on the business type. And I guess they are the level of development in each firm, I suppose. But so it can be kind of multifaceted, I guess.
Okay. Yeah. Now, BNP Paribas, the French bank, who owns, by the way, Cantox, has recently announced a joint venture with Billy in continental Europe, but also in the UK, and the aim is to extend the use of buy now, pay later solutions. What is describe for us? So what's BNPL, buy now, pay later? What's the technology behind that? Why is it so popular?
I think it's becoming very popular all round, and even in the obviously business to customer space, it's driven, I guess, by, I suppose, economic challenges. But also, I think it's becoming more of a thing in the business to business space as well. And again, I think that there may be several factors involved there, including, again, some technological advancements, allowing more sort of mobile digital type payments. But we, particularly in the business to consumer angle, we've got that changing demographic as well. And there's been a bit of an influx in what I would call more, what shall we call them, like digital natives. So I think that's those who have had the luxury perhaps of growing up with technology. I'm not one of those individuals. I certainly came from an era before mobile phones, that's for sure. And I think what those individuals are doing is introducing that into the world of business. So those digital natives basically are kind of bringing what they know and what they're used to into the world of work. And so they're bringing their experiences as consumers and then helping to evolve sort of business expectations around that. And particularly, I would say, including that demand for efficiency and speed as well.
That's right. I was making those gestures because I'm not a digital native either. So that's really, I think, the key point, right? To us, it matters enormously because CFOs in coming years are all going to be digital natives, and they're going to ask, and they want to desire and implement those new payment methods. So you really think demographics, the convergence of demographics and technology is what matters here, right?
I think so. I think, things move forward, things move on. And I think that, as consumers, I despite not being a digital native, I've still managed to keep pace with the way in which payments payments are changing even for me. Like, I very, very rarely use cash. I very, very rarely even use my card. Everything is attached to my mobile phone. So I think it's just the direction of travel that we're headed in. And I think that as consumers, we're used to operating in a particular way, and having convenience and having, funds ready to our fingertips. And I think, therefore, taking that mindset as a consumer into the workplace is therefore influencing more that business to business type of buy now, pay later kind of mindset, in the same way that it has from a sort of business to consumer.
Absolutely. Now, Mark Pedrosa, the Cantor's Global Industry Director for Travel, makes an interesting point. He says that we're witnessing a fintechization of sorts in many industries, but in particular in travel. And one leading example is, of course, Booking.com, right? They introduced their own payments platform. They wanted to have more control over the transactional flow. But here's my question to you, Lorraine. I have the feeling that this is easier said than done, right? The Booking.com themselves admitted that they had some difficulties with things like regulatory issues, compliance, fraud prevention. So what is your view? Would you advise companies just to set their own payments platform? I kind of guess you wouldn't, right?
I kind of wouldn't. And I think I think horses for courses. And I think that, of course, Booking.com, if you look at the market that it's in, it clearly has expertise relevant to that market. It's about getting people to use their platform to book holidays, hotels, travel, etc. It's not really it doesn't sit naturally within their sweet spot for them to suddenly know how to operate a payments platform and everything that goes with that payments platform, from technology through to regulation. So I think there are some significant, there may be some advantages, and I'll give them that, but I think it comes with some significant challenges that I think any business that is not a payment services business trying to wear those sort of dual hats needs to really carefully consider. There may be benefits such as maybe that enhanced customer experience, perhaps increased efficiency, etc. But I think there are definitely very key challenges around regulatory compliance, which is something not to be messed with. Let's be honest, if you're not doing things in a compliant manner, then there's risks to consumers, there's risks to markets, and of course then that risk is going to arrive at your front door as a business. There's also
even reputational risk in this case, right?
Exactly, because if you're falling foul of the regulation, then of course any regulator is going to take that very seriously and could very easily and very quickly put requirements on your business which could stilt your business, halt your business, and obviously that's not good. That's not positive branding for any business.
Right.
But I also think you've got to think that there's wider implications and that these firms need to think about fraud and security risk, which, fraudsters are getting smarter, getting cleverer, and, they're finding new ways to defraud us. So, what's their strength and their understanding in that regard? There'll also be some cost and operational issues, I would assume, associated with that. And I guess all of this really means for me that any business such as Booking.com would really need to approach that payment platform side of their business with absolute caution.
Right. Now, Lorraine, we are at Cantox, a foreign exchange management company. We specialize in currency risk management now. Mark Pedrosa, again, to stay with him, the global director at Travel, makes another interesting point. He says, tells clients, look, it's fine if you want to have your own payments platform, but why don't you start by treating currencies as payment methods? What would you say to that?
Okay, I think that businesses should be taking advantage of currencies, and I think that sometimes is maybe a little underappreciated as a payment method. But I don't think it's necessary to try and reinvent the wheel necessarily. I think it can help firms manage currency risk, but and definitely something that's critical for those firms perhaps operating more internationally. So I think it is an underappreciated payment method. So as you say, let's not try and reinvent the wheel, but let's try and benefit from the use of that as a payment method.
Right. In fact, we just launched the Cantox in-house FX solution that allows those small companies in general to have headquarters act as the entity that sets FX policy, that executes external trades with banks, but that grants liquidity on a 24/7 basis if needed to subsidiaries. So there's lots of ways, I think, to use currencies as payment methods themselves before embarking on trying to develop your own payments platform. Now, in 2023, the UK's Financial Conduct Authority introduced a regulatory initiative. It's called Consumer Duty. As I understand it, you take a broadly positive view of that regulation. Tell us a little bit more about the details involved here.
Yeah, absolutely. Indeed, I do. And I think it represents a real significant step forward in enhancing consumer protection. It's very important, of course, and something the regulator is always behind, but also fostering trust in the financial services sector itself. So what firms really need to have to do now is demonstrate that greater accountability for their actions. It's all about consumer outcomes and how they can evidence good consumer outcomes. I think it seeks to deliver improved product and service design, which is a big consideration of the consumer duty, but with greater transparency so that you genuinely are meeting the needs of your target market. It's not just a finger in the air. And also it demands higher standards of communication. So you need to also consider the channels that you're communicating through, the methods of communication that you're using. And it's all about empowerment for consumers and, of course, a big increased focus on vulnerable customers, which obviously, depending on the nature of that vulnerability, may need a different type of communication style and also a consideration in terms of the product and service design itself. So there's a few things in play here, but genuinely, I think it is a big step forward in terms of ensuring that firms are responsible and accountable.
Right. Lorraine, very recently I read a paper by the Bank of England, and it was a bit of a shock. It's about what we call at Cantox the FX cliff, namely those very sharp movements in the exchange rate and their consequences. Of course, the UK had, or the GBP USD exchange rate had two such episodes in recent years. Of course, the Brexit episode, and in September 2022, the so-called flash crash there. But the findings of that paper by the Bank of England are really startling. They say that many firms in the UK have indeed dollarized or are starting to invoice their non-EU exports directly in US dollars. Do you think that would have consequences on the in terms of the payment space, if it's true?
Yes, I think Brexit has had quite a notable impact on the UK financial ecosystem, and I think that impact, I guess, we can see both as a positive and a negative. So, from a positive perspective, the UK appears to still remain a bit of a global hub for fintech and regtech development. So, open banking and the regulatory sandboxes as such that are being provided by the FCA. But I think as a country, we're still attracting significant investment, and I think overall the UK has demonstrated a degree of resilience. But of course, there's a downside too, such as the end of passporting rights, which previously allowed UK businesses to operate freely across Europe. And what we're now seeing is, in fact, a bit of a shift to places such as Amsterdam, and even now the Middle East as well, incidentally, is becoming more of a bit of a financial hub. And has there been some movement towards the dollar diminishing the pound's role? I think, yes, there absolutely has. And perhaps there's been also some investment in talent drain with that restriction of free movement. So I think a few things there that have had a bit of an impact in the UK environment for sure.
Right. It's that sort of spontaneous dollarization that has caught my mind. I just calculated the degree of forward discount or premium of the British pound versus the US dollar, and it's almost but vanished. So there's the pound is acting a little bit more like the dollar. In fact, it has been appreciating of late. Lorraine, I think we've covered a lot of ground. We started discussing trends in payments and in things like instant payments, and then buy now, pay later solution. We moved on to the possible shift towards not shift, but the movement of B2C methods into the B2B space in general. And then we discussed some fintechization related issues, and of course the UK, the British pound. Lorraine Mouat, is there something you would like to add?
Yeah, I would like to give a bit of a mention to the role of data and analytics here. I think it's a really important one, because I reckon that where you have that proliferation of fintech solutions, like I mentioned right at the beginning, that in itself tends to generate vast amounts of data, which of course can be used to gain useful insights, predict trends, but also personalized services for consumers and for businesses. And I think alongside that, it's important to mention the post-pandemic shift towards digital payment solutions. That's coupled with the more remote working initiatives, which I think has then helped, of course, to drive that. And finally, let's not forget that digital payment, as digital payment solutions grow, so do cybersecurity threats. So I think innovation, digitalization, fintechization, or whatever you called it, they're really, really key themes. But I think that businesses, whilst they're taking advantages of those new innovative ways to make or facilitate payments is to be aware that they need to remain vigilant and make sure that you're prepared for that. And one final point, which is probably a conversation in its own right, and we wouldn't have time for it here, but I think looking to the future, I think it'd be interesting to know what the central bank digital currencies, CBDCs, have in store for us all. We know China and other countries around the world are already ahead of the game. The UK seems to be a little bit late to the party, but I think it'd be good to keep an eye on that and where that takes us.
Absolutely. And we haven't even mentioned the elephant in the room, namely artificial intelligence, but it's implied in this conversation, right?
Yeah.
As you said, so there's that famous case of fraud there with fake identities and with AI created fake identities and all of that. But it reinforces the point about the centrality of data management.
Yeah.
Lorraine Mouat, Head of Payments at Thistle Initiatives, thank you very much for joining us today on Currency Cast, and I hope we will see each other soon here.
Thank you, Agustin. It's been an absolute pleasure. Thank you very much for inviting me along.